Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Shawn Cruz. He's a manager of trading services over at TD Ameritrade with our midday update. And semiconductors continue to outperform on the session. Shawn, it's great to have you with me as always. Before we get into the semis and Tesla, of course, hot story for the day, factory orders, some data out this morning.
Yeah, it was actually it was an interesting order. So I think the headline came in about where everyone was expecting a drop of about 0.7%. But if you drill down into some of the numbers, and you always look at, not just the headline, but you want to look at some of the different components. So they put out new orders, and new orders is actually pretty important. We look at it as sort of a leading indicator. So you can see what orders are coming in, because that actually will translate into economic activity in the coming months. So what we saw there was, a little bit of a slowdown for the new orders, but I don't think anything so troubling that you need to really, I'd say, hit the panic button just yet. So that was one thing to look at. The other thing was for shipments. So shipments, there is actually something, if you're looking at some of these stocks, you can actually get an idea of what's been going on in this quarter. And we look at computer storage, had double-digit gains both month over month and year over year of 20%. So 20% month over month, 23% year over year. And that benefits certain names like Western Digital, for example. And they actually got an upgrade earlier on in the week, and the stock's having a pretty good day as well.
All right, oil prices starting to moderate even more to be 4 or 5 trading days into the year, and there's been no shortage of news. I mean, if you look at oil, you'd think nothing really happened over the past couple days.
I think that is sort of the first order, asset that is going to react very strongly to any development out of the Middle East. And you saw that massive spike in crude oil when we got the airstrike last week, and then we had the statements out from Iran. It looked like things were going to escalate, caused oil to go higher. So one thing I think that happened was, one, we didn't get an immediate response from Iran that really showed there was going to be a serious escalation.
Kind of typical with Middle East tensions, where it's not an immediate response.
Yeah. I think everyone was expecting something fast and immediate to really escalate things. We didn't get that, so I think they've kind of sort of calmed down on that front. But then also, a lot of these companies out there that have exposure oil, the producers, were probably out there hedging and locking in some of those prices. The way they lock in prices is they sell futures, and so by selling those futures, that also puts selling pressure, which pushes downward pressure on the price. So I think as we continue to move further and further away from the events last week, I think you can see a little bit more of a gradual drop in the price of oil, but you need to be on guard because it can come out, it could come out right now, and you're going to see oil potentially spike all over again. All
right, now just going into the segment, the Nasdaq 100 just dipped into the red, but prior to that, it was the only major average that was in the green. The Nasdaq 100 and of course the Nasdaq Composite stocks, the semiconductor index, all those names with the upgrade from Cowen on Western Digital, another semiconductor company.
And I think you've got the Consumer Electronics Show going on, so that's always based off what analysts think of what these companies are showing. That's always going to be a little bit of a volatile area, at least for the next couple of days. But one thing we're seeing today, trade optimism, I think, is still there. They're still optimistic that maybe this phase 2 trade deal is actually going to have some pretty good progress. I think that's helping some of the more cyclical names, because we actually saw industrials up earlier as well, but semiconductors up 2% at one point today, and you saw names like Micron, which got an upgrade. You also saw Intel, AMD, a little shaky, but you've seen some pretty good headlines coming out across the board for some of these semiconductors. So I think it's going to be a sector that can potentially maybe help buoy the market just a little bit as we get some other volatility events that have the potential to push us lower.
It's interesting what you say about CES, because it's not just the technology sector that's moving. All the other sectors, like industrials, for example, they are all tapping into technology and really transitioning their story.
It is, and we're hearing things on what do you call it? The alternative
GM, and yeah.
You're even hearing stories about alternative meat products coming out of CES as well. So yeah, it's not just a tech-specific who's going to have the newest gadget, who's going to have the best chips coming out. You're also looking at who's going to utilize a lot of the power of this technology for their business, because that can be looked at as driving efficiencies, that can lead to margin improvement, better customer experience, which can just help the business in general. So yeah, there's a lot of I think implications, a lot of things to be taken away from CES beyond just the tech sector.
To the past couple of years where people are attaching blockchain to their company titles, and we saw what happened to some of those stocks. Let's go to our chart for the day. Tesla, quite a move, all-time highs today, certainly a very different picture than what we're looking at in June.
Yeah, and one thing that sticks out to me though, so there's a lot of optimism about Tesla because it looks like they're finally getting things figured out overseas. We've got the factories in China that's finally stood up producing cars. They've also talked about moving into Europe, getting a factory stood up over there. I think there's some optimism in Tesla finally being able to figure out these production issues that they've had. So once they started to figure that out, if you look at the chart, you actually did see a pretty good rise in Tesla here initially, and you saw implied volatility, which is sort of the fear uncertainty index for a stock. Implied volatility fell off as well, which is what you would expect to happen. But now if you look, as we're pushing these new all-time highs, we're actually seeing implied volatility increase, going from 35%, now it's up to 52%. So it's not even a small increase in implied volatility. There's been a pretty steady climb. And I think what that is as we hit these all-time highs, there's still some traders, some investors out there who maybe don't think Tesla's entirely in the clear just yet. So maybe they're not selling the stock, but they're going out there and they're maybe buying puts to hedge their positions. And that's going to cause that implied volatility number to rise.
All right, Shawn, thanks for joining us as always. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.